Hi traders, this is Andrew, and I just want to show you what to look for in terms of the head and shoulders pattern. So first things first, we want to identify a key level of resistance from your daily or 4-hour chart. And you can see we're currently looking at the daily chart here. You want to look at the major swing. So from this swing high down to this low, that's what I would call a major swing, and you want to draw your Fibonacci tool as we show you in section 2. And you can see price is currently around the 38% level. So it's around these areas here. If we just take a horizontal line, drop it down, 38 level, it's around these areas here that you want to start looking for possible patterns. See at this 50 area as well, we've got an area of resistance here becoming support. Also something you want to watch. So if we just move over to the 4-hour chart now, maybe we can fine tune the level slightly. Here again, you look at the swing down, that's the major swing, and you see the 38 level, nice resistance, holding. So it's around these areas here, you want to look for a pattern. Alternatively, if you look up, have a look at this block right here. This is the area, remember we referenced that in section 2, fine tune your entry. Let me just zoom this in, this is what you want to be looking for. See this consolidating area here, and price takes a nice plunge down. Reference this area, that last little white candle in that block before we really release to the downside. That's a nice little order block sitting there, and you'll have orders starting to stack up around that area. So here again, you could choose to use a limit order there, but as I showed you in this course, we're looking for specific patterns. Okay, so once we've identified our key areas of support and resistance from the larger swings, higher time frames, just mark these areas off. Okay, so we can mark this area here. You can see prices already hit the level here, so if there's no pattern forming there, you want to start looking slightly higher up to your next area. So these are the two areas we want to pay close attention to. And if we just have a look at the hourly chart here, we just step this forward, you can see price comes up to the area, stalls out. So these are the areas here, you see 38 and that resistance. These are the areas you're looking for those patterns. Okay, so we've now spiked through the 38, coming up into that next area. Bang. Alright, so there's that area that we marked off from the 4-hour, that order block being hit. Nice rejection here. So now it's just a matter of looking for a pattern. So I'm going to just remove this eclipse. You can see that area, the 50, and that resistance area being hit. So just wait for some sort of confirmation in terms of patterns. Here we're going over the head and shoulders pattern and what to look for. And I'll just zoom this up. So you can see price breaking down, and you can see this formation. We have a nice push up, take some orders out as explained in the example, drops lower, and then we have the spike up into our key area of resistance from that daily chart, and we start rejecting. You see how we take this low out right here? So what you want to do is you want to reference this point on the left hand side. Okay, so if this is the left shoulder, you can see how we have price shifting up nicely. We then have this drive deeper, picking up those orders at that key area of resistance. Now we've broken to the downside. You can see how we've cracked this low, and if you draw a little trend line in here, you can see we find support along the way. Break, actually retested the area very briefly and then dropped. So we're now setting up for a possible head and shoulders, and the most important level for me right now is looking across to this left shoulder, so that we have a left equals right. We can draw fibs into this, but the most important number for me is this area. So if we just put our eclipse across here, here again, you can highlight these areas because these are where you want to start looking for limit orders to be placed. Draw some fibs in here and get rid of this trend line, and this is the area here that we're looking to place a trade. So let's move it forward slightly. Alright, so once price starts to break up towards that 38, so getting ready to put an order in, what I want to do is I want to look to sell it about a pip or two just below this swing high. The high is 23.27. Initial stop's going to go above the high up here, so it's going to be quite a heavy stop, and it's quite nice if you are working full time or you just want to swing trade these things. You don't have to be in front of your chart all day long. Okay, these patterns take a good few days to set up. So what I want to do is I want to place a stop just above the high, and I'm going to target the lows here, about 100 points give or take. So if we just go in to our orders, new pending order, we will discuss orders in the next section where we go over specifics of entry, stops and take profits, so don't be too worried about that for now. So I'm going to put an order in at 23.25, like 2 pips below this swing, just in case we miss it, and a stop loss above. So we said what about, let's move it down to up to 60, and we can add, let's say 65. So just above the high here. You could even go as high as 70. So about 70 points of risk, and I'm going to look at targeting down towards the lows. Now the take profit is going to be up to you. Like I said, you can go for 1-to-1, you can go for the old lows or the extensions. It's really dependent on the market environment and also the type of trader you are. So targets 22, 25 area, go down towards these lows, maybe a few pips above that, maybe let's say 30. Place that in, and here again you can set your alert. So we're looking about 90, 95 or 70. Okay, to start the trade, and we're looking for a move to the upside. So if we just draw this in, we're looking for that move up and then that drop to form that head and shoulders. So we just move this forward. Remember, if price breaks the lows, you'll just need to redraw your fibs on this swing down. But we've identified a higher time frame key resistance area. Alright, so we've just been taken into the level, and it's very important to place your orders into the marketplace like this in a limit order. We try and chase this. You can see price hits the level, and already we're 11 pips up. So we just follow this along. Now obviously, depending on the type of trader you are, you can look to reduce your risk on the trade if you want to. For this example, I'm just going to leave it as is and just shoot for our target down towards the low. So you can see if you move the stop to break even, already you were up about almost 50 pips on the trade, and prices obviously had a rally back up. You see how it moves slightly deeper, just filling some orders just above the level. So you're looking for that continuation down now. And these patterns can take a while. This is an hourly chart. Alright, so there we've had that nice release down into those lows, and we've just been taken out. And you can see that was worth 95 pips on the trade. So nice little trade. And here again, structured from a higher time frame key resistance area. So there's the pattern: left shoulder, head, right shoulder, and we're looking to play the right shoulder on a limit order. Stops above the high. This is the way I like to trade it. Targets, like I said, old lows or the extensions. Old lows are very reliable, especially with these patterns. So just a quick recap on that. We identified key resistance from the daily or 4-hour chart. This is the 4-hour swing down. There's that order block that we reference right there. Pay close attention to that area. Price spikes up, hits the level, releases nicely, and then we get that hourly head and shoulders pattern where we're looking to trade that right shoulder, anticipating that right shoulder. So we get the left and the head forming. This low gets taken out, price rallies, limit order set in. You can see price sits here for a good few hours, and we get that nice release to the downside. And we just follow price along. You can see price starts to find support at these lows. So a good place to be looking for profits. And you can see if your stop was at break even, you would have been stopped out. Alternatively, you can see price actually runs towards the highs here, just above the highs, filling those orders, and we release to the downside. So it's just the way it goes. Good place to watch those lows or highs depending on the pattern. Hope you found that helpful. Hi traders, it's Andrew here, and just want to show you what the inverse head and shoulders pattern looks like on a actual chart. First things first, we want to identify your key level of support from a high time frame. So you see we're currently looking at the daily chart, and you want to take the major swings, so from the very low up to the very high. You can see that 50% level lining up with an area of support and resistance across here. You see how we're referencing this last bearish candle before price broke to the upside, and here we have an area of support and support. So we just want to look at the 4-hour chart, see if you can possibly fine tune the level slightly. So there's the swing, and let's just compress this for you. So there's that 50 level, nice area of support. You can see here supporting here, becoming resistance, back to support. Look at the rejection in terms of the wicks, closes through, back to support again, and then we break through, comes back, retags it as support, and we get a nice release. So not a bad looking area. What you can do once you've identified these higher time frame levels is mark them off on the chart like that, and set your alert. Okay, so if price doesn't hit the level, there's nothing to be done. Just follow price along and see what happens. Okay, so we've had a nice reaction off that level. Now once price hits the area, you want to move over to the smaller time frames. I'm just going to go to the 30-minute because this is where the pattern seems to look the best, and I'm just going to take off our eclipse. So there we have price come down to our key level at 122.44, and we've released nice enough. If you have a look at this little area here, we've cracked this trend line, so price in a nice downtrend, and comes down into our key level of support from the daily or 4-hour chart. Nice release to the upside. See, it breaks this high. So if we have a look at, zoom this in, you can see what we potentially have here is the left shoulder that's formed, and then this drive deeper into that key area of support is the actual head of the pattern. And once price breaks to the upside, we can now draw fibs to see if anything lines up. Now the most important point for me to reference here is this dealing point right here, this left shoulder. If I just take this line and move it up to that area, 122.65 is the most important level in this pattern for me. So I'm going to highlight that, and what I'm looking for now is I'm looking to put a buy limit order at this area right here. And if we just trace this out quickly, you can see we've had this nice push up. So we have this left shoulder, the head, and now I'm looking for the right shoulder, and that's where I'm looking to place a trade with a stop loss below this point. So if we go to our order, put a pending order in, a buy limit 122.66. okay, the level's at 65, so just add in your spread. I've got a spread of 1 pip on here, and a stop loss. I'm going to put stop just below the low here, so put 30 pips. You can see we've got a 30 pip stop. Now targets, it's going to change from person to person. You can either go 1-to-1, or you can look at the highs up here for a target, very good place to take profit, or your extensions 127 or 1618. In this example, we're going to go for the 127 extension, so we're looking at around 123.35, 34 area, 334, and you can actually drop it down a pip. So just don't go for the exact number, just drop it off a pip or two. So we're about 60, 67 pips, somewhere around there, for a 30 pip risk on the trade. So we'll place that in, have your alert set so that you're aware of if price hits the level. Here again, we're not going to chase the price or wait for confirmation with candles or anything like that. This is a limit order, and we're looking for price to move down and find support for a possible right shoulder, and then a possible move to the upside. Okay, so that's what it's going to look like. and we've got a stop loss in place if price continues its downtrend. These are reversal patterns, so sometimes you'll be wrong and you'll find out pretty quickly when price plunges through. So price is moving down, and you can see we've now just been filled in on this order. So there's the working order. We're currently 2 pips up and looking for a move to the upside now to our target. So you see how the left shoulder is now equal to that right shoulder. We just follow along. Price is now starting to break to the upside. Now you see how price hits this area of resistance. Okay, it's about 20 pips or so from your target. You could definitely take some profits there. If you wanted to, you could move your stop to break even. You see this level right here. What I'm going to do is see if price can hit the highs or get to resistance up towards the highs here, and then move that stop to break even. So price moving up. Just follow it along. Okay, so price has now popped the highs here. What I'm going to do, you can see we're currently up about 50 points. Move the stop to break even. Okay, so we entered at 122.66. Stop loss is at 122.66 and the target is 123.33. And we'll just follow this along and see what happens. And then you can see price has now hit that level. So nice little trade that happened. Let me just compress this for you. You can see price came down, hit this key level. Remember the higher time frame level from the daily or 4-hour chart at that 50 area. Price released nicely to the upside, and then we had a pattern that we identified with, which was the inverse head and shoulders, which paid very nicely. Hi traders, it's Andrew, and I want to show you an example of a bullish crab pattern. Once again, you want to identify key levels of support or resistance from your higher time frame. We're looking at a daily chart at the moment, and you see this upswing here. We want to take our Fibonacci and draw it from the low up to the high. So we're looking at the major swings. We then want to take our horizontal support resistance line and just move it down to locate potential areas of support resistance. Now we've come down to that 38 level and we've bounced quite nicely off that area already. We just have a look a little bit lower here around these lows. You can see price holding a support along the way. Resistance breaks through, becoming support. And it's at these areas here that we're looking to structure potential trades. If we now move over to the 4-hour chart, let's have a look at what that area looks like. You can see price holding very nicely around this level here. Good support. Remember, we're not trying to look for the exact turning point in terms of the level. So what we're doing is we're looking at possible patterns setting up that complete at these areas. That adds to the probability of the trade working out. So if we have a look at the hourly chart, you can see price rallies and then it starts to retrace. So if we have a look at this right here, we draw our fibs in from the very low up to this high. See how price rallies, it then starts to retrace and it comes down and finds support at this 62% retracement. Now, as with the butterfly, we're also looking for very specific retracements. So I'm looking for a 62% retracement for the crab pattern. And we just trace this in for you. So we've rallied off the lows. We've then retraced all the way down to that 62% Fibonacci level. And then we've started to rally. Now once that happens, you want to take your fib tool and you want to draw from the high down to the low. You can see we have a 79-127 extension, and that forms your Bullish Gartley pattern. And if that fails, then what you want to look for is you want to look for the crab pattern, which forms further down. So if you have a look at our extensions or projections, there's the 127 that we've been using for the butterfly, and there is a 1618 with the 2618 rejection from the smaller swing. So very tight confluence, and the tighter the number is to that 62 Fibonacci level, the tighter this number and this number are going to be. So that's the level right there. If we just drop this line down, that's the area of interest that I'm looking to buy at. And if we just move to the 4-hour chart and just move this out the way, so if we now take our eclipse tool and we mark this off, that's the area down there. So you see it's a very deep retracement. Okay, there's the 127 where most of the traders are looking. The 1618 combined with that 2618 is a very powerful turning point. And just have a look at that daily chart where that comes into play. See that lining up with the big 50 from the upswing. Okay, so we're getting a pattern that's giving us an opportunity to enter in right at the number. Now with these patterns, you need very small stops, because they either work very aggressively or they continue to the downside. So if we have a look at this, I'm just going to compress this and look at this area here. If we use a 40 pip stop and we're going to target up towards the highs here for about 200, so it'll be about 5 to 1 risk reward on the trade. Let's go to our pending orders. Want a buy limit 56. We'll add the spread in. Let's make it 17, and I'm going to use a 40 pip stop on the target. I want up towards the highs around that 58.20 mark. So if we just see what happens now and follow price along. So price breaks down. You see it stalled very briefly at the 79,127, and then it takes another leg to the downside. So we just follow it along. Big spike down. These patterns can take quite a while to set up, so you really need to have patience for them. Okay, so we've now been filled at the key level, and look at the reaction of this area. Once again, have a look at that daily chart, very key higher time frame level, and we get this hourly pattern forming and completing right at this level. So we have an actual method of entering right at this area, and like I said, very tight stop needed, because normally you see price respect this area and should release at some stage. Now the key support or resistance area at the moment is this level right here. That's point X. So if we look at this in terms of numbers, X, A, B, this is the C swing up, and then this is the D completion point all the way down here. So it's quite an extension to the actual pattern completion area. And see how price sort of sits in this area. We just have a look at the open positions, going up about 50 pips. So price hits the resistance, it breaks through, and now we're starting to release. So you can see the actual drawdown on this was very small, so you really don't need big stops if these patterns are going to work out. Now you just need to be patient and let the market do its thing. This is an hourly chart, so it's taken quite a while to get going here. If we just move to the 4-hour chart. Alright, so eventually we break to the upside and the target is hit. And you can see the trade, we risk 40 to make 200, so very nice risk reward on the trade. And as I said, very tight stop needed on these patterns. You can see price actually continues to the upside. So that's the bullish crab pattern. Hi traders, this is Andrew, and I'll show you an example of a Bearish Crab pattern, we first want to identify our key levels of support or resistance on the higher time frames. You can see we're currently looking at a daily chart, and if we just look at drawing our Fibonacci from the very high down to the very low, you can see we have this 79 level. We take a horizontal line, just drop it down towards the 79 area. You can see this level here holding us resistance, 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 and resistance once again. Look at the rejection in terms of the wicks here. So we identified a key area where price is likely to move or bounce from that area. Now if we move to the 4-hour chart, let's have a look at this area a bit closer. You can see nice rally up, price started to slow down, and you can see the rejection. Look at the big rejection here, starting to move down a little bit. Move to the hourly chart, you can see we have the possibility as well of a head and shoulders pattern. So we just draw this in for you guys. You can see this left shoulder, possibility of the head, and you'd look up towards that right shoulder area there if you're trading the head and shoulders pattern. Okay, so just adds an extra bit of weight to this area. Just want to clear this off. Now if we move to a 15-minute chart and show you what's happening on this area, you can see this is that area we drop off from the daily and continue lower. If we have a look at this swing down on the 15-minute chart, you can see we've dropped, we've rallied, we've dropped, and now we're starting to sort of consolidate. If we draw a Fibonacci from the high down to the low, this is the swing we're looking at here. So if we sketch this in, this would be XA. Price rallies up to the 62. So when price rallies up or retraces to a 62% fib level and then comes back off it, you want to start thinking about the possibility of either a Gartley or a crab pattern. So if we draw our Fibonacci retracement tool from this swing low up to this high, and just trace this in for you. So you can see we've dropped, we've rallied, dropped again to the 79 level. Now what you'd be looking for is you'd look for a move to the upside. So you have a look at that 1618 or the 2618. That's the completion area for the actual bearish crab pattern. So we just highlight that. So you're looking about the sort of 65, 70, maybe just a little bit below 69 area, somewhere around there. Nice tight confidence here again. I like to reference the actual 1618 extension over the 2618 extension. So it's this deeper swing down. So if we label it with X, A, B, C, and we're looking for a rally now all the way up to point D. So it's a real deep move to the upside. What I'd also like to look at is this swing down. Just have a look to see where we are in terms of our major retracement levels. So we've got this retracement down, and you can see the 79 level is just above this area here. So as with the other crab patterns, I want a tight stop loss, because what you'll find is when these things work, they work pretty much to the pip. So we're going to look at a stop loss just above the 79 level, which will be about, let's call it 15 pips or so, and our target will be way down here towards this, towards the lows here, around the 886 area. So if we just follow price along here a little bit, we want to see what happens. So price starts to break above these highs. You can see it takes out the 79 level. I'm going to put an order to sell short. So put a new pending sell limit at, I wanted a few pips below here, so the area is about 69. I'm going to put it around 67. I always like to put the order a few pips above or below a level of interest. and I'm going to use a stop of 15 pips. It's going to put us just above the 79 area, and the target I want down towards that 164.40 area. 164.40 is the target on there, so we place that in there. You can see our risk reward is about 127 pips for 15 pips, so very, very nice if it does work out. Once again, just recap: higher time frame, key area of resistance. Look at the completion area of this actual crab pattern. So if we just follow this along, okay, so the sell order has been hit. We just go to our open positions. You can see we've been taken in, currently about 15 pips up. With these kind of patterns, you really need to give them a bit of time to start working out. Look at the reaction off that area. Bang! Immediate selling pressure. And the first area you want to watch on these patterns is this level right here. You see this area acting as resistance. This is a level of potential support. You can see it actually bounced off that area about 20 pips before committing below and continuing. So once we get that commitment below, we can maybe start reducing some risk, but I'm not going to discuss the actual trade management just yet. So I'm just showing the actual pattern and how we go about finding it and trading it. So moving forward, you can see the pip count at the bottom there, about 70 pips or so up. Taking quite a while to start moving in our favor. So now we're starting to break down, and you can see we've now hit our target. So let's have a quick look at that. 127 pips from the initial entry down to our target. We'll just recap that. That was the Bearish Crab, found at key higher time frame resistance from the daily chart. Remember, we're not just trading a 15-minute pattern, it's the actual area, the completion of the pattern, that is the important part. Hope you found that helpful. Hi traders, this is Andrew, and I just want to show you an example of what the bullish base pattern looks like. We're currently looking at the daily chart. We want to identify key levels of support and resistance. So if we have a look at this last swing up on the daily, from this low up to this high, and we take our Fibonacci retracement tool and draw it from the low to the high, you can see price is currently sitting around that 886 Fibonacci level. If we now take a horizontal line and we just drop it down towards that 886 level, you see this base right here, that last bearish candle before price moved out of this area to the upside. Pay very, very close attention to that area. If we have a look at the smaller time frame, let's just move to the 4-hour chart here. I'll show you what this looks like. So there's the move right there, from the low up to the high. There's the 886 Fibonacci level, and look at this clean area. Support, breaks below, becomes resistance, and then we take a big leg to the upside. So a very key area of support right there, and you can see price taking a big leg down to that area. So what you want to do, once you've identified these key higher time frame levels, is go to your smaller time frame to look for a potential pattern. So if we have a look at the 5-minute chart, currently looking at this level right here, so I'm going to get rid of this eclipse. So having a look at this area right here, you can see how prices moved down to this key area from that daily chart. And just have a look at this area right here. We have a very nice clean dealing level. Support in here, closes below the level, becomes resistance. So what I'm looking for with this pattern is for price to actually commit above this range or this base, and then look for a possible buy opportunity. So you can see we've now had 5-minute commitment above the level, so we have support in here acting as resistance, and now what I'm looking for is I'm looking for a retest of this area as support for a possible buy. Remember, my bias is long because the daily chart or 4-hour chart has that key area of support. Now in terms of getting in on this area, you can just use a market order, and we're looking for an entry around the 5500 area and the round number, with a stop loss just below the low, so about 15 pips of risk. But our target is going to be on a higher time frame. So if we just have a look at the hourly chart, targets, you can see we've got some areas of support and resistance in here. Just move this down. We've got an area in around this area, support in here, support, breaks through, becomes resistance, spikes us through here again. So on that 5620 area, looks like a good place on the higher time frame. So let's just have a look at this area right here. So what we're looking for is a retest to buy on. Okay, so there's your retest right there. Now you can enter on a limit order if you want to. You can see price moves back into the area, gives us another opportunity. Entering on a limit order is ideally best, but we're just going to enter on a market. So we're going to buy it with a 15 pip stop just below the low, and the target, I'm going to target up 5624, so it's about 120 pips for 15 pips of risk. So we're currently long. Just move it forward. You don't need to stop much more below the low here, because if that gets taken out, the pattern is no longer valid. We're just shifting this forward now, and now we're starting to slowly break to the upside. Be careful of not moving the stop too aggressively on these sort of trades. See, slowly moving around here again. You need to sit in this trade for quite a while. Just be very, very patient. Price is on to grind high. You can see higher highs, higher lows, and what I want to do is I want to put a take profit in on this at 5624 area. That's from the hourly chart that we've identified. I'm just going to move now to the hourly chart and move this forward just to speed up the video. So if you understand what the base pattern looks like, you can see we've got another similar setup here, trading a range, and then it comes back and retests the range on the hourly. So similar sort of thing happening on that 5 minute. You can see now we're starting to move to the upside, and the target's now being hit. Okay, so if we have a look at the trade, we've got 122 pips for initial risk of 15 pips on that trade. Let me just show you that on the 5 minute once again. So this is the bullish base found at a higher time frame key level. You can see we trade in a range, support becoming resistance, commits above. As it comes back, you look to enter long with a stop below the low, and you target your higher time frame for your profits. Hope you found that helpful. Hi traders, this is Andrew, and I want to show you an example of the bearish base pattern. So first thing we want to do is identify a higher time frame key levels of support or resistance. We're currently looking at a daily chart, and if we have a look at this large swing down, so from the very high down to the low, I'm going to draw our fib tool for the retracement from the high to the low. And if you now take your horizontal line and just move from the top, work your way down, you can see this 50 area right here, okay, where prices actually just hit sort of that area right there. We have the 50% retracement, and then this nice level you can see across here holding a support, again a support, now back to resistance. Remember, these are zones that we're dealing with here, so we're not looking at specific numbers, but that's a level there that we can look to on the smaller time frame for a potential pattern. So if we move over to the smaller time frame, let's move to an hourly chart quickly. You can see prices moved up, spiked into that level of resistance. Nice big spike up there. If we move now to the 5-minute chart, you can see the nice rally, prices hit that key level, and then it started to break to the downside. Now have a look at this level here. If I just move this horizontal line down, so I can get rid of this eclipse. If we have a look at this level right here, you can see we have resistance, breaks through, comes back, tests support. Remember, we have our higher time frame resistance from the daily chart right here. So my bias is short. Now what I'm looking for is I'm looking for commitment below this level, and I'm looking to sell on a limit order for price. If it does come back to retest, I want to enter short with a stop loss above the high. And in terms of targets, I want to look to the hourly chart for possible targets. So you can see we've got some areas of support resistance. We've got level in around here. You can see it's held as support, resistance, 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 breaks above, tests support again, and we've got this big spike, and then slightly lower we've got this area in here. You can see here resistance, support, breaks through, comes back, test support, test support. So two areas of interest. The first level would put us around 70 pips, second level about 100 pips. So if we go back now to that 5-minute chart, we now want to put a limit order to sell. If you're looking at these shorter time frame patterns, you really need to be paying attention and be pretty quick on this. So we want to sell it at 57.60 with a stop loss just above the high, so 15, let's call it 17 pips, and a target around this 88 area. Just going to add the spread in, so let's call it 90. So in at 60, and we look at 90, so about 69, 70 pips for a sort of 16, 17 pip risk. Just follow along. You can see price now retraces back to the level, and we've now been taken in on the trade. So now you just need to follow along. You can see price moving off that level pretty nicely. Don't be too aggressive with your stop management either. Remember, we're trading a higher time frame key level of resistance, so we need to give it a bit of space to breathe. Currently up about 20 pips. Okay, now we have had a spike down. Our level has been hit, and you can see we've been taken out for 70 pips, and it actually moved down further into the next level. I'll show you that hourly, into the next level of support right there before bouncing. So that's the bearish base for you, found at higher time frame resistance. Let's now look at a bullish Gartley example. We first want to find higher time frame key levels of support. Looking at a daily chart, you can see we've had a nice move to the upside. We then started to retrace. So if we draw our Fibonacci tool from the low up to the high, we're looking for some confluence, and you can see around this area right here, you see the area of support becoming resistance. So if we take that horizontal line, just drag it from the top down to the bottom, you see this area right here, 70.7 Fibonacci retracement, lining up with this area here. Again, reference that last bearish candle before price explodes to the upside. So that base right there, that's the most important reference point in terms of the support resistance on this last leg up. So we've got a nice bit of confidence. Remember, these are zones. Okay, so you can see on the daily, although it's about 35-40 pips apart, they are zones, and we're looking for patterns to actually confirm that that area or zone is holding. So we now move to the smaller time frames, and I'm just going to move to the 15-minute chart. You can see we have price drop off and then hits this key level, and it starts to rally. So once it starts to rally and retrace, you want to start looking for possible patterns. So if we draw Fibonacci from the high, from the low to the high, you can see price retraces and it just pops through that 62 level. So we could start to think about the possibility of a Gartley pattern setting up. So if we just trace this in, we've got a swing up which is labeled X to A. We then retrace in point B, and once we get this retracement, it starts to retrace on this move up. Draw your tool from the high to the low, and you're looking for confidence. Now that's 79,127 extension area, about 6 pips apart. Okay, you're not going to get the exact sort of textbook look-alike in the market, so you need to be able to give it a bit of leeway in terms of looking for, you know, that perfect setup. The price starts to retrace on us now, so we have this rally up, X, A, B, C, and now what we're looking for is we're looking for a buying opportunity around, I'm just going to move this level up, the 79 area, and you can see around the 34.41, nice little base in here as well. You see this last little blue candle before price moves to the upside. So I want to highlight this area right here, and remember our stop loss is going to go below the low, so you're going to look at about give or take 25 pips, somewhere around there, and target, we'll just shoot for the highs here, so look at about 25 plus for about 67, somewhere around there. So we're looking for a move to the downside, and that's essentially a bullish Gartley for us. So if we go to our orders, pending orders, new pending order, and we want a buy limit, and if we just put this in 34, and I'm going to add the spread, so I'll put 43 plus 1 with a stop loss below. So I'm just going to go around 30 and see where that goes. We can move it up a little bit. So okay, so 34.16, and a target we're going to go for around this 35.10 area. Just sort of select 70 and see where we go. So around about this high here where that 886 retracement is. So we place it in the market. Here again, set your alert. So if prices hit the level and you're not at your desk or you're doing something else, it alerts you to what's happening. And if we just follow this through, you can see we get spiked into the level. Look at the immediate reaction. If you just look at your open orders, really 14 pips up on the trade. Okay, so it's very important to have those limits waiting in the market. Now you just need to be patient and wait and see what happens. So up about 40 pips. Now depending on how you manage this, you could reduce risk on the trade or get to break even, or you could just leave the trade open and shoot for take profits or take partials. There's so many different ways of doing it. I'm just going to leave it really simple for now and leave the stop where it is and look for that target. Okay, so yeah, bullish Gartley here, and we're now starting to move to the upside. So we've just been taken out. Nice little pop up there, and if we have a look at the account, we can see we made 66 pips on that trade. So we just recap that. From the daily chart, we found the key level of support, higher time frame support, 70.7 Fibonacci retracement, with a nice base of support becoming resistance, back to support, and then on that 15-minute chart, we had a nice bullish Gartley form, enter with a limit order, target was up towards the high. You can see price moved a little bit further from there. Hope you found that helpful. Hi traders, it's Andrew, and I want to show you an example of a bearish Gartley pattern. We're currently looking at the daily chart, and you can see we're in a nice downtrend. So the first thing you want to do is identify higher time frame key levels of support and resistance. When the market's very strong like this in a trending environment, you normally don't get very big pullbacks. So when the market's range bound on the higher time frames like a daily and 4 hour, you'll find you get much bigger or deeper retracements. When the market's very strong in a trending environment like this, you want to start looking at smaller swings. So there's a little bit of a discretion involved. Here again, if we take this swing high down to this low, want to identify potential levels, and if we just take a horizontal line, drag it from the top and just work your way down. If we get round to this 50 area here, you can see we have resistance. Look at the actual candles closing, or unable to close it. We then close above, come back, test the support, then close back below that level. So around the 30 area on the daily, it looks like a key area of resistance for us. If we have a look at the 4-hour chart, just see if we can fine-tune the level slightly. Okay, so we've got a couple areas of interest here. The first area is this daily level. You can see how we have real nice resistance here becoming support. If you look slightly higher, have a look at this area right here. We consolidate and then we take a nice leg to the downside. Now this little block right here, you see that last white candle? That's very important in terms of a dealing level. So I'm going to mark off two levels here. The first area is this swing right here, 62% retracement with that little block, and then the 50 level slightly lower. Now if you move to the hourly chart, let me just compress this. You can see we have that big swing. There's the 62 and the 50 level. If you have a look at this drop down, if we look at this leg to start with, we just draw a Fibonacci tool from this high down to this low, you can see price actually retraces up to that 62% Fibonacci area and then starts to retrace to the downside. So if we mark this off, we have a swing down, then price rallies up to the 62, so this would be X, A, then we'd rally up to B, and you can see we start to retrace. So you want to draw your Fibonacci tool from the low up to this high. So when price starts to come off that 62 and get to a minimum of 38% retracement, you want to draw your fib. So you can see we drop, we rally to the 62, then we start to retrace, and the minimum is a 38% for this pattern setup. But have a look at what we have here. We've got the 79% Fibonacci level with the 127 extension, which forms a perfect bearish Gartley pattern. And if we just compress this, remember this was the major swing down that we looked at from the daily chart, and you see that 50 level from the daily with that key area of support and resistance. Let's just have a look at this from the 4-hour. So make sure that you're switching to different time frames to get a better feel of what price actually looks like. So there's that level that we identified, resistance becoming support. Okay, and there's that block slightly higher up. So the way I like to trade this is look to enter on that 79 level with a stop loss above this high. Okay, so let's go back to the hourly chart, and we're looking for an entry. You can see that area 30-30. If we go to our orders, pending order, we'll put a sell limit at 30, and I'm going to put it 2 pips below. Okay, and a stop loss above this high, so about 30.80. Let's just have a look at that. 80. I want to make it a little bit further, maybe 85. Okay, so just under 60 pips, and the target I'm going to look at going down towards these lows here. So 128, let's say 60, 65. The target's going to be dependent upon the individual, but the lows or the highs, depending on the pattern, are very good. So you're looking about 160 points for about 50, 58, somewhere around there of risk. Okay, so let's just follow price along. Remember, this is an hourly chart, so it takes a good few days to set up. So we have everything preset. Okay, so we've now been filled. You can see the order been filled here, sold at 30.28. We're currently 9 pips under. It's important to put your stop loss above the highs of the pattern. So that's, remember, X, A, B, C, and then this swing up now is the D point where we're looking to trade short from. And remember, we've got this block up here, this order block sitting here, so that's an area we definitely want to take reference to, because price can still spike up to that area, which is almost 30 pips from our entry. Okay, so we've got a little reaction there. Okay, so we've now popped up higher, filling more orders in this area. Okay, prices, you see how price sort of moves its way higher into this block here, just picking up more orders along the way. Stop loss is still above the highs. Okay, so now we're starting to break down. Now we're looking for price to now move below the low. So you can see how important it is not to start moving or stop too early on these big patterns. You don't want to get stopped out too early. So once we start releasing now, you've got an option. If you want to, you can take your risk out of the trade. We'll go into the actual management side in another section. But for now, just showing you what the pattern looks like. So you just shift your 4-hour chart and just have a look to see what's going on there. So that was the area of resistance. And just clear this fib off there so it doesn't look too messy. So just delete this quickly. That's the area of resistance right there. That's the pattern. We drop, rally up to the 62, retrace, fill at the 79, and price is now starting to move down nicely. Okay, so you see how we have a limit order waiting, and our target is down towards these lows. Just step this forward, and we've just been taken out. So a nice little trade there, and if you just have a look there, you can see 163 pips of profit. Okay, so that's the Bearish Gartley. Once again, find a higher time frame resistance, pattern sets up on the hourly chart, stop loss above the highs, entry on a limit order, target down towards the low. Hope you found that helpful. Hi traders, this is Andrew again, and we're now going to look at an example of a Bullish Bat pattern. So first things first, we want to identify key levels of support and resistance on the higher time frame. We're currently looking at a 4-hour chart. I just want to compress this quickly to show you the market environment in a nice uptrend at the moment. Prices retraced and then rallied, and if we just zoom this up, if we draw our Fibonacci from the lows up to the highs on this 4-hour, you can see price actually retraced, initially came down and found support at this level right here. You just take your horizontal tool and drop this down. You can see price came down to the 50. Look at this area right here, resistance, support, support, find support, and then it rallies up to new highs. We just adjust that fib now that we've made those new highs, and you can see that area right there, price has proved to us that the levels held and aggressively moved off this base around the 38.78 area. So if we move over to a smaller time frame, I'm going to go down to a 30-minute chart. What you want to look at, I'm just going to adjust this fib level here. This is that swing from the 4-hour. That's the key level right there, that 38.78 from the 4-hour chart. Look at the buying pressure in the market. Nice move off. Now, what we're going to do is we're going to draw fibs from the low up to the high. Okay, and that you can see is our aggressive move off our key level of support. Now, just follow along and see how price moves from here. Once we hit the 38 level, we can now start looking for a retracement and a possible pattern. So depending on the retracement of the XA swing, so here's your X at the bottom, there's your A at the top. Depending upon the actual retracement, if it's a 38 to 50, it's a possible bat setup, and if it's a 62%, then we're looking at the Gartley around the 79 level. So if we take our Fibonacci tool and we draw it from the high down to this low, just follow and see what happens. Remember, we need a minimum of 38% retracement. So here we didn't make the 38 level, so we just need to follow it along and see what happens. So you can see now we've come just through the 50 level, but we haven't quite hit the 62 or 618. Now have a look at the real tight confluence here, the 886 and the 1618 extension. That forms your bullish bat pattern. So if we now draw this in, so there's the drop, initial rally off our key level of support, X to A. We then retrace down to point B, and then we rally. You can see we're currently sitting around the 50 level, so we need a minimum of a 38%. We're currently at the 50, so that's fine. Now what we're looking for is a move to the downside. Okay, once price starts to retrace, we want to look for a possible buying opportunity down here towards the 886 level, and that's around 38.72 area. Okay, so we can highlight that like such, and what you can do is put a limit order into the market at this area. And what I like to do is then set my alert, so if I'm not at the computer or doing something else, I can come back and check up on this. So first things first, let's go into our orders, pending order. You want to place a buy limit, and the level we want is 38. For buy, you want to add spread, so I'm going around 75. Okay, we're dealing with anyway from a pip to 2 pip spread, so around 75, a few pips above our level, and a stop below, so around 38. Let's try 38.50. So try 20 pips and see what happens. Okay, so we'll do a 25 pip stop. So in at 75, stop at 50, and target I'm going to go towards the highs around the figure 140. And that should give us a decent risk reward on the trade. So we place that in. With the bat patterns, you want to place your orders and be aware of these patterns pretty quickly, because this leg down towards that D point can be very aggressive at times. Let's follow along and see what happens. Okay, so we've now been filled at this area right here. You can see our position. We're filled at 38.75, stop loss at 38.50, so 25 points of risk, or pip of risk, and the target we're looking up towards the highs here, about 125 pips. Okay, so really nice risk reward on these trades. Let's follow along and just watch price carefully. Remember, as with the other pairs, be careful about moving risk out of this too quickly. You can see we had a spike up on this, almost 90, just over 90 pips actually. So it's going to be your choice in terms of targets. As I said, we will go over the targets and take profits, etc. in the next section. For this example, we're just going to follow price along. You can see price comes right back into this area for some more orders, and we're still looking for price to pop higher. Alright, so now we're starting to release to the upside, and you can see we've just been taken out. So our trade, you can see 125 pips for 25 pip risk, and that's your bullish bat pattern. Remember, the key thing here, found at higher time frame support level. Right traders, let's now have a look at an example of a bearish bat, and we're currently looking at the 4-hour chart. So the first thing we want to do is look for higher time frame key levels of resistance, and if we just have a look at this sort of market here, you can see very choppy price action. I'll just compress this for you. And what we want to do is you want to look at the major swings. Okay, so from the very high here down to the very low is where you want to draw your fibs. So we draw the swing in here. you can see prices retraced all the way up to that 70.7 area and released to the downside. So if you just take a horizontal support resistance level, just drop this down, you can see this area in here where prices held previously. We have resistance, support, for sort of support there, holding as resistance again and again, and then we come back to the area. And if you have a look at the level just below that, look at that 62 area, also a very nice clean level of support resistance. Remember, they are zones, so we're not looking at specific numbers, and you can see we're dealing in around 30 pips, somewhere around there, 40 pips in range. So that's the area of interest, that's the area of resistance. So you can mark that level off there, and what you want to do is, in a market environment like this, you can look to structure trading opportunities or patterns inside this range. If we now move to the hourly chart, you can see this is the rally. Look how clear it looks on the hourly chart. This is the release, nice release to the downside, nice selling pressure coming into the market, and then price starts to retrace. So once we get this initial move down, just zoom this up, we can look to label this the XA swing. So there's the Fibonacci swing down, and if we just draw this in here, that would be the X, that would be the A. Then price starts to retrace, so we can see we rally up to the 38, retrace a little bit, rally up just past the 50, and start retracing again. So if we draw a Fibonacci from the low up to this high, you can see we have the 886 lining up with the 1618 extension. Now that forms your bearish bat pattern. If we just highlight that area right there, so that's the level of interest to us, and we just move this line here, you can see that's 62% and the 70.7 from the 4-hour chart coming in play on the left hand side. Just adjust this line, so there's the 886 level, and that's the level that you want to be looking to place your limit sell order. So if we trace this pattern in, you can see we've dropped nicely, we've rallied up just past the 50, now started to retrace again. And remember, on this initial retracement here, so we've got the X, A, B, C. On this C retracement, you're looking for a minimum of 38%, and it can sort of go down into the 886. So that's kind of what you're looking for. And what we're looking for now is we're looking for that move to the upside. So we just follow price along. You can see price spikes up like this. Have your order set, okay? Have your order set. So what we're going to do now is we're going to go to the pending order. We're going to put an order to sell right up at this 886 area, which is at 43.67. We'll put it at 65, a couple pips below, and we're going to put a stop loss just above the highs here. So 30 pips. Let's go around 40 pips should do the trick. Okay, if the price takes the highs out, the pattern becomes invalid, and then you obviously want to be out of the market. And targets, here again, we'll keep it simple. We'll go down towards this 886 area, around the 140, 140 area. Okay, so we'll put that in place. So we've got a sell limit at 65. Targets about 220, 24 pips for risk of about 40. So very very nice risk reward, and that's what's going to the bat patterns. They're very good at doing that. Okay, because the stop goes, as with the Gartley and the head and shoulders, goes above the highs or point X, and the targets, like I said, the lows are pretty good places to take profits. You can also target the extensions. So let's just follow along. Okay, prices now filled us in this this pattern or this trade. You can see our pending order currently 8 pips down, currently 24 pips down. You can see stop above the high, so if you run into trouble, price continues to the upside, you're out of the trade. Okay, so now price is starting to release to the downside. Be careful not to move your stop to break even too quickly. Price is now starting to break down nicely. You can see if you'd move your stop to break even, having been up 50, almost 60 pips, you would have been stopped at break even. So just be very careful about that. You need to give the market time to breathe, because you've actually just taken the highs out. You almost hit the stop loss. Alright, now we're starting to break down. You can see we take these lows out and actually close below the lows, currently up 75 pips. Here again, you can move your stop to break even when you start hitting these key areas. You see this area of support in here. If you want, you can move stop in there. We will go over and discuss the actual trade management side of things, but for now we'll just keep it really simple. You can see we're up 172 pips on this one, and price is now sort of finding support down towards the lows, and we've just been filled on our take profit. So 225 pips. You can see it just took over sort of a day here, but that's the bearish bat pattern. Here we can find a key resistance. Price comes up, hits the level, starts picking up the orders around the area. It takes a while to get going. Okay, very common for it to do that, and then we see price release to the downside. So that's just your bearish bat pattern. Hi traders, this is Andrew, and I want to show you an example of a bullish butterfly pattern. First, I want to identify our key levels of support or resistance from your higher time frame. You can see we're currently looking at a daily chart, and what you want to do is you want to look at the major swings. So if we draw our fibs from the very low up to this very high, and we start to look at the swings to the downside, take your horizontal line and just move it down the page to see if we get any kind of fib lining up with the actual horizontal support resistance. So have a look at this 50 area here. This is interesting. See how we have price holding as support in here, becoming resistance, and here again reference this last bearish candle. You see this bearish candle here before price broke to the upside. That's really important, and it plays a big role in my trading. So this area here is something of interest, that 50 level lining up with that base nice previous level as well. So I want to see if we can structure a trade, a pattern in that area. So if we move over to the hourly chart, you can see at the moment we have price sitting in a range, and you see this nice rally off the level. Price starts to retrace out of this range. If we draw our fibs from the very low up to the high, see how price comes all the way down to that 79 retracement, and then it rallies. Once that happens, you want to start thinking about the possibility of a butterfly pattern. So if we draw our fibs now from the high down to this low, this is the initial setup for the butterfly pattern. If we just trace this in for you, so we rally, and you would label this low X, the high A, price retraces all the way down to the 79 level, and then price starts to rally again. So if we now look at this move up, what we're looking for is we're looking for a move down, and we just look at that 4-hour chart. So there's the completion point of the butterfly, the bullish butterfly right there on the 4-hour. Let's zoom this up. So you see how we're stuck in this range, big rally up, price retraces down to the 79, then rallies up to the 70.7, and now that 127.1618 extension forms the buy area for the butterfly. Now the closer you get price coming to that 79, the tighter this conference is going to be. So if you have a look at this fib level here, let's just have a look at that hourly quickly. If you have a look at this fib level here, if you adjust it to where that 79 level is, have a look at the extensions. You see they basically become the same number. So the tighter this area is here, the tighter that conference is going to be. So I'm looking at the 127 and 162 level to come into play, and once again, just let's go to the daily chart You see that 50 with that base. Now the butterfly is coming in a little bit above this key area. Remember, these are zones, so I'm trading the pattern, but I'm trading it at a key level on the higher time frame. And the stop loss would go just below the 1618, so which would actually be below the main 50. So I'm looking at that 50 area and this key area of support and resistance holding, and the butterfly is going to get me in with a stop loss just below the 1618. So it's quite a big stop. This is more a swing trade, and I'm going to actually just move to the 4 hour. We can see it probably a bit clearer on the 4 hour. So what we're looking for now is a move down to this 127 area. So I'm going to put that area there. Just move this forward. Okay, so price has actually spiked down. Big move down on the 4 hour. What I want to do is I want to put my buy limit in with a stop just below the low. So you're looking at about 90 pips of risk, which is pretty heavy. But in terms of the actual reward, we're looking at a reward back up towards the highs here. So put a buy limit in at 161.64. Stop loss I'm going to put around 90 pips, just below the 1618. And the target I want way up here to the 64.50 area, somewhere around there, just towards, you see the highs up here, good level to look for profit. So we look at about 90 pips of risk, and our target is around 280. So real nice risk reward on the trade, and you don't need to be right too often to make some good returns on that. So let's just go to the hourly chart and just work this through, see what happens there. So we have price rally. Now you see where price comes short of this level, you've got a choice of either pulling your order. See, it's come about 10 pips, call it, from the level, then it starts to rally. You can either pull your order or you can leave it in, and that's going to be a discretionary call. Very often you'll find the order still sitting at that level waiting for price to get there. See, now price now spikes into the level, so now being filled at 61.64. I'll just follow along. Price now moves deeper into the level. See, I sort of finding a bit of support here at this big level from that 50 from the daily chart. Price still moving in this range. Let's just have a look at this on the 4 hour chart. See how price starts to respond off the 50 level here. So that's what we want to see. We want to see that level hold. And now what you want to look for is you want to look for price to actually clear and hold above this level right here. So this area here is going to act as potential resistance. So we need price to actually trade above that level and close above the level. You can see still battling to get through there. Now we start to release to the upside, and now I want to see if price can continue that move. So you see how price comes back, references this last bearish little candle here, this block. See here, support, resistance, support. Now we start to break up 100 points up. In terms of removing risk on the trade, everyone's going to do a little bit differently. So I'm just going to keep this really simple and just leave the stops alone and look at that target. And you can see price eventually moves up and hits the target. So nice little trade there, and that was worth 286 pips. And that was your Bullish Butterfly completing at a higher time frame key area of support. Hi traders, this is Andrew, and I want to show you an example of a Bearish Butterfly pattern. First things first, we want to identify higher time frame key levels of support and resistance. Looking at this last swing down on the 4 hour chart from the very high to the very low, we want to take our Fibonacci tool and draw the swing in here. Then want to take a horizontal line and run it from the top down and try and find a nice confluence where you have support and resistance with a Fibonacci level. So you can see here, very nice clean resistance level becoming support, lining up with that 70.7 level. So that's the 4 hour key level. I now want to move to the hourly chart, and if you have a look at this last swing down right here, so just move this line across, we have a nice drop off, and then price rallies up to the 79% Fibonacci level and then starts to retrace. So once you get price hitting that 79 level and it starts to retrace, you want to think about possible butterfly patterns. If we go back to that 4-hour chart, you can see that 127 extension is lining up, projection lining up with the 70.7 and that key higher time frame level. So very nice confidence there. I'm just going to move this level across here so it's out the way for now. And if we zoom this up, this is actually a 4-hour butterfly pattern. Can be seen on the hourly as well. So that's a swing. We have a nice drop, then price rallies up to the 79 and it starts to retrace. So if we take our fib tool and we draw it from the low now up to that high, you can see we have a nice confluence. Let me draw this in. This is X, A rally up to B. We then retrace. You can see the retracement here. Retracement down to point C. And we're looking for a rally up. Look at that 127.1618 extension lining up with our deeper retracement as well as that higher time frame key area of support and resistance. So very nice confidence there, and that's the area that we're looking to trade. The stop loss on this would go just above the 1618 if you're trading this big pattern, which is about 80 points of risk. So we just sort of follow this along. Okay, price still retracing around. I want to put a limit order in to sell. So if we go to our pending orders, there's a sell limit, and we're going to put it in at 32.70. I'm just going to drop it down about 68 with a stop loss. We said about 70 points. Actually, we'll make it a bit bigger. So about 80 pips, just above that 1618 area, and we're looking to target down towards the lows here. So around the big figure 1.3, just above there. Let's have a look to see. Yeah, that looks about good. I'm gonna add in about 3 pips, so we're just above the figure. So we put that in there. So let's just have a look. We have a stop about 80 points or 80 pips and a target of about 260 odd pips. Okay, so nice risk reward. This is a 4-hour pattern, and we just follow this along. It takes quite a while, and you can find these patterns in advance, which is quite nice. So price now gets filled at our level. You can see with this retracement right here, price never ever made a new low on the retracement here, so the pattern is still valid for me. And now the target, once been filled, if we just look at the open orders, target's down here towards those lows. So we just follow this along. Remember, this is a 4-hour chart, so it's taken quite a while to start moving. Good few days. This is more a swing position, and you can see that gap lower filling the take profit. So 265 pips on that trade. We just compress this once again. The level was found from this swing high down to the low. This is visible on a daily chart. Nice area of support and resistance, and then we have the bearish butterfly forming. Very nice confidence right there. You can see price hits the level, sits around there, and eventually it gets going, and you'd have to have quite a bit of patience for this, but these larger swings can pay very nicely. Hope you found that helpful.